Welcome back to Explain the Charts. Today, August 7th, 2025, we're diving deep into AUDUSD, dissecting recent news and its impact on the price action you see on your screens right now. First, let's talk about the macroeconomic landscape influencing the Aussie dollar. Recent reports highlight robust Australian trade balance data, which has provided a significant tailwind for the AUD, contributing to its sharp gains. However, conflicting signals emerge from the U.S. side, with news that John Waller is favored for the Fed chair position, known for his desire for rate cuts based on forecasts. This potential shift towards a more accommodative monetary policy from the Federal Reserve could weaken the U.S. dollar, thereby indirectly boosting AUDUSD. Yet, Capital Economics suggests continued weakness for the Australian dollar, adding a layer of caution to the bullish narrative. Current market dynamics, as noted by UB Group, place AUDUSD within a defined range of 0.6450 to 0.6555, making these levels critical to watch. Action Forex further pinpoints the 0.6528 level as a significant resistance point. Now, let's turn our attention to the daily chart of AUDUSD, encompassing data from early 2024 through to today. Zooming out, we can observe a clear downtrend that persisted for much of late 2024, reaching lows around the 0.62 mark by December. A notable event was the sharp decline on April 4, 2025, where the pair plummeted to a low of 0.5985, an extreme bearish candle that highlights periods of high volatility and significant downside pressure. Since that April low, AUDUSD has shown a strong recovery, establishing a clear medium-term uptrend, driven largely by improving Australian economic indicators like the trade balance data we just discussed. This recovery has been characterized by higher lows, suggesting underlying bullish strength building over the past few months. The 0.6450 area has emerged as a key support zone, consistent with the lower bound of UB Group's identified range, acting as a floor for recent pullbacks. On the upside, the 0.6528 level, highlighted by Action Forex, and the 0.6555 mark from UB Group, represent significant resistance levels that the price needs to overcome for further sustained bullish momentum. Breaking above these levels would signal a strong continuation of the current recovery trend, potentially targeting higher resistance levels not seen since mid-2024. Let's narrow our focus to a specific, interesting period on the 1-hour chart, from July 21st to July 23rd, 2025, to examine short-term price behavior. During this time frame, we see a distinct short-term bullish impulse, with the price consolidating briefly around 0.650 before pushing higher. The robust green candles on July 22nd indicate strong buying pressure, confirming the intraday bullish sentiment that can contribute to the larger daily movements. Notice how, even within this uptrend, there are small retracements, offering potential entry points for short-term traders looking for pullbacks to support levels like 0.652. The volume profiles during these uptrends also appear healthy, reinforcing the validity of the upward moves in this specific period. Transitioning to the 15-minute chart, specifically focusing on the most recent trading days from August 4th to August 6th, provides a granular view of the immediate price action. Here, we can clearly see the choppy, yet overall upward trajectory that aligns with the daily chart's recent bullish candle. The price has been steadily grinding higher, with brief consolidations and small pullbacks, indicating a cautious but persistent bullish sentiment in the very short term. Intraday support can be observed around the 0.647 to 0.648 levels, where the price found buyers on multiple occasions. The sustained higher lows on this time frame are a positive sign for short-term bullish continuation, but traders should watch for volume spikes on bearish candles as potential warnings. Bringing it all back to the daily time frame, the correlation between the recent robust Australian trade data and AUDUSD's upward trajectory is evident. The potential for a dovish shift at the Federal Reserve, with figures like Waller being considered, could serve as a significant fundamental catalyst for further AUDUSD appreciation, counteracting any inherent Aussie weakness. For short-term traders, Entering long positions on pullbacks to the identified intraday support levels, combined with confirming volume, would be a viable strategy, targeting the immediate resistance at 0.6528. A clear break and sustained close above 0.6528 and then 0.6555 on the daily chart would strongly reinforce a bullish long-term outlook for AUDUSD. Conversely, a rejection from these resistance levels, particularly if accompanied by high selling volume, would signal a potential reversal or significant consolidation back towards 0.6450. If the 0.6450 support breaks, the bears could gain control, pushing the pair lower towards the 0.64 handle or even retesting the April 2025 lows near 0.60. Traders should closely monitor upcoming economic data releases from both Australia and the US, especially any further indications from the Federal Reserve, as these will be crucial market movers. The likelihood of a significant upward move beyond 0.6555 in the short term is moderate, perhaps 60%, if sustained buying pressure continues and no negative Australian news emerges. A reversal down to 0.6450 is also moderate, around 50%, especially if the 0.6528 resistance holds firmly and the US dollar finds renewed strength. In the long term, if the global economic outlook remains stable and the Fed indeed moves towards rate cuts, a retest of the 0.67 resistance seen in mid-2024 is plausible, but this is a less certain prediction. Perhaps 40% likely within the next few months. Always remember to manage your risk effectively, use stop losses, and adjust your strategy based on confirmed price action and evolving fundamental news.